Have you ever made, like, a really terrible decision?
Oh, I think we all have.
Right, like maybe jumping into a super volatile investment or taking a job you just knew in your gut was wrong for you.
Or even just, making a massive purchase you definitely couldn't afford.
Exactly. And then you find yourself staring at the ceiling at like 2 in the morning asking yourself, what was I thinking?
It's the worst feeling.
It really is.
Yeah.
Well, stick around because by the end of this deep dive, you are going to have the exact tools you need to make sure you never have to ask yourself that question again.
That is a big promise, but we've got the material to back it up.
We absolutely do. We are jumping straight into the psychology of risk, uncertainty, and decision-making today. And our source material is Denise Shull's incredibly provocative book, Market Mind Games.
Such a fascinating read.
It really is. And the whole mission of this deep dive is to essentially shatter everything you thought you knew about making logical, rational choices, especially in high-stakes environments.
Right, because we're taught to just look at the data.
Exactly.
Yeah.
But we are going to explore why your emotions, the exact thing society tells you to suppress, are actually the most valuable objective data points you possess.
It really is a pervasive problem, isn't it? That haunting feeling of looking back at a choice and feeling like a total stranger to yourself.
Yeah, totally.
And the reason you experience that so often is because our entire modern culture has, well, fundamentally diagnosed the mechanics of decision-making completely incorrectly.
We really have. We operate on this deeply flawed conventional wisdom that emotions are just the absolute enemy of good choices.
Yes. We treat feelings like they're just static on a radio broadcaster.
Right, like interference.
Exactly. And we think the ultimate goal is to tune them out completely so we can just hear the pure music of data.
Which leads to this idea that to be successful, you basically need to become a robot. And the book brings up a perfect archetype for this, which is the Vulcan.
Ah, yes, like Spock from Star Trek.
It's exactly. From business school to the trading floor, you're essentially conditioned to believe that the ideal decision maker is someone who just crushes their emotions down, ignores their gut entirely, and relies purely on logic and spreadsheets.
Yeah, and directly related to that Vulcan archetype is another, honestly, very dangerous one the book identifies, which is the number worshiper.
Oh, I know a lot of number worshipers.
Right. This is the executive or the trader or even just the everyday person who falls for the illusion of absolute certainty.
They think math is magic.
They really do. They operate under this assumption that if they just gather enough data or, run enough quantitative models and stare at enough charts, they can mathematically eliminate risk.
But Shull has a fantastic reality check for this in the book. She writes, "Numbers look you in the eye and lie."
Such a great quote.
It is, because numbers are really just static representations of a single moment in time. They don't capture the messy, wildly unpredictable, highly irrational human element that actually drives the world.
Okay, let's unpack this for a second. I hear what you're saying about numbers, but I feel like I have to push back a little.
Go for it.
Aren't numbers kind of the only objective truth we actually have to navigate the world?
I mean, they feel like it, sure.
Because telling me that numbers lie and suggesting I should rely on my emotions instead of hard data, that sounds, I don't know, incredibly reckless.
Yeah, I get that.
It sounds like trying to drive a car down a highway by ignoring the speedometer entirely and just guessing how fast you're going based on how the wind feels on your face.
The speedometer analogy is like the most common way people think about this. But here's the thing. What's fascinating here is that the neuroscience completely invalidates that separation.
Really? How so?
It is not a choice between looking at the speedometer or feeling the wind. Biologically speaking, you literally cannot read the speedometer without feeling the wind first.
Okay, wait, I want to make sure I'm getting this right. You mean literally before?
Yes, literally.
As in chronologically, the emotion happens in the brain before the logic even boots up?
Chronologically before, yes. When Shull dives into the biology of decision-making, the science reveals that the brain's emotional centers, like the amygdala, they fire before the rational centers in the prefrontal cortex during any decision process.
Oh, wow.
Emotion and cognition are structurally inseparable in the human brain. You just aren't wired with a bypass valve for your feelings.
So when you try to be the Vulcan and suppress your emotions...
You aren't actually eliminating them at all. That is a biological impossibility.
Right.
What you're actually doing is pushing those emotions into your unconscious.
Yeah.
And once they are hiding in your blind spot, they will secretly hijack your decisions anyway, usually in highly destructive ways.
So you really cannot conquer your emotions because they are an integral biological part of reason itself. Yeah,
Fair.
so, I mean, the 2008 financial crisis, that's basically the ultimate catastrophic case study of this Vulcan mindset failing.
Oh, it is the absolute textbook example.
Because leading up to 2008, you had the smartest quants in the world at the biggest banks, right? And they were relying on the most sophisticated, purely rational mathematical models ever created.
They genuinely believed they had perfectly measured, compartmentalized, and contained all the risk through pure data.
But then the housing market started to wobble, and those purely rational models just completely collapsed.
Because they lacked an input variable for human panic.
Precisely. The quantitative models assumed humans act as, rational utility maximizers.
Right, they assumed humans are Vulcans.
Yeah. The spreadsheets assumed that if the data says X, the market will calmly do Y. But they completely failed to account for sudden, massive, emotionally driven shifts in human behavior.
When fear took over and the entire global market panicked, humans didn't maximize utility. They sought safety at all costs.
And the models didn't account for blind terror, so the spreadsheets were utterly useless.
Which is wild to think about. So if pure data is kind of an illusion, and our emotional wiring is fundamentally the thing driving the car, what exactly is the reality we are looking at when we look at a market? Or even just a standard negotiation?
That brings us to how the human mind actively constructs reality, which is just fascinating.
And I want to pause here to talk about the author, Denise Shull, because her background explains so much of this.
Oh, yeah. Her resume is incredible.
She spent 25 years studying risk, working as a head trader at a New York Stock Exchange member firm, and combining, and this is a bit of a mouthful, neuroeconomics and psychodynamic psychology.
It is a mouthful. And to be honest, it sounds a little bit like academic word salad.
Yeah, right.
Yeah.
Like, how do those two things actually help someone make a better choice?
Well, let's break them down because they are crucial to her framework. Neuroeconomics is essentially the study of how our brain chemistry physically reacts when we evaluate risk or, when we win and lose money.
So it's the actual biology of financial choice.
Yeah, exactly. Psychodynamic psychology, on the other hand, is a framework for understanding how the unconscious emotional baggage you carry from your past secretly drives the choices you make today.
Okay, so it's the biology of the brain mashing up with the ghosts of your past decisions.
That's a great way to put it. And by combining those fields, she actually became the real-life inspiration for the character Wendy Rhodes on the show Billions.
I love that show.
Right. On Wall Street, her whole reputation is built on untangling what she calls the spaghetti bowl of traders' emotions.
And she does that by recognizing that markets, and really any high-stakes environments, have immense symbolic power.
What does she mean by symbolic power?
Well, when a trader is looking at a fluctuating stock chart, or when you, the listener, are looking at the price history of a house you want to buy, you aren't just looking at objective math.
Right.
You are looking at a deeply psychological drama. That chart represents your personal success, your potential failure, your ego, your power, and your deepest vulnerabilities.
So we're essentially projecting our own internal insecurities onto the numbers.
Exactly. And when we project those insecurities without realizing it, we get what Shull calls the ash cloud.
The ash cloud. She uses the 2010 volcanic ash cloud that grounded thousands of European flights as a metaphor for this. Right?
No, she does. But I want to understand the mechanics here. How does an emotion literally obscure reality? Because it's one thing to say we are biased, but she calls these billion-dollar bonfires.
Yeah, really are.
How does an unacknowledged emotion actively change what we literally see on a screen?
It comes right back to that biological mechanism we talked about earlier. Perception is not a passive process. We don't just receive reality like a video camera recording a room.
We filter it.
We actively construct what we see based on what we expect or need to see. So when you have an unacknowledged emotion, say a desperate fear of missing out or just sheer terror of losing your job, your body pumps out stress hormones like cortisol.
And that changes how your brain processes visual information.
Yes. That physical response literally narrows your cognitive focus. It causes tunnel vision.
So you could be staring right at a spreadsheet that shows a terrible, disastrous trend, but your brain just filters it out.
Exactly. Your brain will actively ignore the glaring red flags that contradict what you desperately want to be true, and it will artificially highlight the one tiny piece of data that makes you feel safe.
That is terrifying.
The mental ash cloud is the accumulation of all those unacknowledged emotions blinding you. You are flying blind, but your spreadsheet is telling you the skies are perfectly clear.
Okay, let me try to put this into an everyday scenario to see if I'm tracking this.
Go for it.
Let's say you are buying a used car. You find one that looks amazing. It's shiny, it's red, it's your absolute dream car. You want it so badly.
Okay, I'm with you.
You take it for a test drive, and there's a very obvious weird clanking noise coming from the engine.
Uh-oh.
Right. But because you have this massive, unacknowledged emotional desire for this car to be the one, your brain's ash cloud just filters out the clanking noise.
Yeah.
You literally convince yourself it's just the road surface. You look at the price tag, you buy it, and the engine blows up 3 days later.
That is a perfect, localized example of the ash cloud in action. Now just scale that used car purchase up to thousands of traders moving billions of dollars.
Oh, man.
They are all filtering data through their own personal ash clouds of fear, greed, and ego.
So if perception is reality, and everyone is projecting their own internal dramas onto the data, does that mean the entire global financial market is essentially just a giant collective mood ring?
That is a highly accurate, if slightly terrifying, way to look at it. The market is not some abstract mathematical entity hovering above us.
Right.
It is a massive, real-time collection of human beings reacting emotionally to each other, which brings us to the core solution of Shull's work.
Because if emotions drive the market, and they're biologically unavoidable in your own brain, what do you even do?
You have to get, as she calls it, better eyeglasses.
And the prescription for those glasses is the central thesis of this deep dive.
Yeah.
You have to treat your feelings as data.
Which is a massive paradigm shift.
It really is. Anxiety, fear, excitement, the urge to panic. They're not distractions you need to crush with logic. They are signals.
They are vital diagnostics, but we need to be incredibly careful here to distinguish treating feelings as data from just acting recklessly.
Definitely.
Shull outlines an archetype called the intuition truster. This is the person who trades purely on gut feelings with absolutely no self-awareness.
A person who just wings it.
Exactly. They feel a sudden urge, assume it's a stroke of genius, and act on it immediately. They confuse a fleeting emotional bias like just being cranky or overly excited for a brilliant market insight.
Right, that's just gambling with a better vocabulary.
Yes, exactly. True intuition, as defined in this framework, is not mystical. It doesn't come from the ether.
So what is it then?
True intuition is your accumulated experience being processed unconsciously by your brain. It is rapid pattern recognition happening way faster than your conscious mind can articulate.
I see.
Treating your feelings as data means observing those internal signals objectively and questioning them, rather than just blindly obeying them.
To ground this, there's a really great quote from a review of the book in the Financial Times. They pointed out that this whole framework isn't about Wall Street traders beating their bare chests or letting out primal therapy screens on the trading floor.
Right, it's not a therapy session.
Her techniques are strictly focused on one thing: making more money.
If we connect this to the bigger picture, you make more money by adopting the archetype of the emotional reader.
The emotional reader.
Yes, this is the fully integrated decision maker. Instead of suppressing emotions like the Vulcan or blindly following them like the intuition truster, the emotional reader channels their feelings into productive action.
So how does that work in a split-second moment?
They recognize a feeling, take a micro step back, analyze what that feeling is telling them about the environment or their own biases, and then use that insight to make a clearer choice.
Here's where it gets really interesting for me. I want to bring back a variation of the car analogy because it crystallizes this perfectly.
Okay, let's hear it.
It completely shifts how I should react to my own body. If I feel a sudden knot in my stomach before I sign a big contract, I shouldn't try to be the Vulcan, ignore the knot, and just sign it to be illogical.
Right, don't suppress it.
But I also shouldn't be the intuition truster, totally panic, and immediately rip up the contract.
Exactly.
I should treat that knot in my stomach exactly like a check engine light on a dashboard. A check engine light doesn't mean the car is exploding that very second, but it is a definitive signal demanding that I pop the hood and run a diagnostic.
The check engine light is a brilliant starting point, but let's take it a step further. What does popping the hood actually look like in your mind?
Oh, that's a good question.
When you feel that knot, you have to ask yourself, is this not telling me that my unconscious pattern recognition just noticed a hidden flaw on like page 4 of the contract that my conscious mind missed? Or is this not telling me that I am projecting my fear of a totally unrelated past failure onto this new, perfectly fine contract?
Wow. Yeah, those are two very different things.
The only way to find out which one it is to actively read the data of your own emotion.
Okay, so that is the perfect bridge. If the knot in my stomach is a check engine light, how do I actually pop the hood and read the diagnostics without getting completely overwhelmed by the emotion itself?
Right, because the emotion can just flood you.
Exactly. We've talked about the philosophy of treating feelings as data, but let's get into the concrete, practical toolkit. And this whole toolkit revolves around building what Shull calls psychological capital.
Yes, psychological capital. This refers to the emotional and cognitive resources you draw on to make decisions.
So it's not money.
No, it includes your self-awareness, your emotional regulation, your resilience, and your confidence. Shull argues that in high-stakes environments, you have to manage your psychological capital with the exact same rigor, metric tracking, and care that you manage your actual bank account.
Because if you don't,
If your psychological capital is depleted, your monetary capital is soon going to follow. The ultimate goal for you, listening right now, is to become a psychological capital builder.
she gives 4 specific tools to build this capital. Let's dig into them. The first one she recommends is journaling before making decisions.
Yes, rapid journaling.
Not writing a diary of your day, but explicitly writing down what you are feeling right before you pull the trigger on a choice. But let me pause and play devil's advocate here.
Please do.
If I'm a trader or someone in a really fast-paced corporate negotiation, the situation is moving in milliseconds. Are you seriously telling me I need to pull out a leather-bound journal and write an essay about my feelings before I click buy or sell?
I know, it sounds crazy.
That sounds like a great way to lose a deal entirely.
I'm really glad you brought that up because that is the absolute most common objection. And no, this is absolutely not about writing poetry or essays while the market moves without you.
Okay, good.
It is a rapid diagnostic tool. The journaling can be as simple as jotting down 3 words on a sticky note. Anxious, rushed, fearful.
Just 3 words.
Just 3 words. The reason you do this is entirely neurological. When a feeling is just bouncing around inside your head, it's being driven by the amygdala.
Right, the emotional center.
But the physical act of translating that emotion into language and writing it down forces the electrical signal in your brain to move to the prefrontal cortex, the analytical center.
Oh, wow.
By putting it on paper, it is suddenly outside of you. It becomes an object you can analyze rather than a hidden force driving your hand.
So you're literally shifting brain states by writing it down.
Exactly.
That makes a lot of sense.
Yeah.
So moving on, the second tool is body awareness. Literally tracking your physical sensations. Are you clenching your jaw? Is your heart rate elevated? Is your breathing shallow?
Because, as we discussed, the emotional centers fire chronologically first, and they almost always manifest physically in your body before you consciously register the thought in your mind.
Right. So your clenched jaw is essentially the early warning system that an ash cloud is forming.
Bingo.
The third tool is creating physical energy. Now, this sounds incredibly basic, like preschool advice almost, but it is a cardinal rule for elite performers.
It really is.
It's the HALT acronym.
Yeah.
You do not make massive decisions when you are hungry, angry, lonely, or tired.
HLT, yes.
So what does this all mean? Here is where it gets tricky for me. If I am using this toolkit, how do I realistically separate a genuine, intuitive signal, like my unconscious pattern recognition catching a bad deal, from just being cranky because I skipped lunch?
That is the million-dollar question.
Because they both feel like a bad move.
Right. It's a crucial distinction and goes right to the heart of why psychological capital requires active daily management.
Right.
As we established, true intuition is the result of deep, domain-specific experience.
Right?
Being cranky from skipping lunch is just a physiological stress response. It creates emotional noise that actively blinds you to real patterns.
Yeah, I see.
If you haven't done the prep work, if you haven't used the journaling to establish a baseline of how you normally feel, and if you aren't monitoring your physical state, you will absolutely confuse the two.
You will think your low blood sugar irritability is a brilliant contrarian insight telling you to short a stock.
Exactly. Physical maintenance is non-negotiable because you have to remove the physiological noise so you can actually hear the real intuitive signal.
The noise obscures the data.
Got it. And the fourth and final tool is reading the emotional state of the crowd.
Yes.
Taking a step back from the spreadsheets and asking, what is the collective psychology of the market right now? But how do you actually do that in practice?
You look for the emotional extremes. Instead of just looking at the price action of an asset, you look at the sentiment.
Like checking the news.
Yes, or checking social media. Are people on financial news or Twitter acting out of desperate FOMO fear of missing out? Is there an overwhelming sense of panic? You have to ask yourself, what is the dominant emotion in the room right now?
And if you can figure that out, if you can accurately read the collective mood ring of the market, you can anticipate how the crowd will behave rather than just reacting to the math after the fact.
That makes total sense. And I want to point out to you, the listener, how directly relevant this is to everyday life. You don't have to be a Wall Street trader to use this.
Not at all.
Whether you are an everyday investor managing a 401k or a manager trying to read the culture of your team, these tools, rapid journaling, body awareness, managing physical energy, and reading the room's mood, are how you build real emotional resilience.
Because ultimately, the absolute best risk management strategy you will ever deploy is self-knowledge.
Self-knowledge over spreadsheets.
Exactly. You cannot possibly hope to manage external risk in a chaotic world if you do not intimately know your own internal emotional triggers.
If you don't know what makes you panic or what makes you dangerously overconfident, the market or your competitors will find out for you.
And they will charge you a hefty price for the lesson. So true. We've covered a massive amount of ground here today, so let's kind of synthesize the journey we've just taken.
Let's do it.
We started with the realization that the traditional model of the emotionless, purely rational decision maker, the Vulcan, is a total biological myth.
A total myth.
Numbers lie, they lack human context, and trying to suppress your feelings only pushes them into your blind spot where they just wreak havoc.
Right.
The market and society at large is not some external mathematical reality waiting to be mastered by a spreadsheet. It is merely a reflection of human psychology.
Which is such a powerful reframe.
Therefore, the very first step to mastering the market or mastering any high-stakes environment in your life is mastering yourself. You just have to treat your feelings as vital data.
This raises an important question, and it's one I want to leave you to ponder as we wrap up today.
I love these. Lay it on us. Think about the very next major life decision you have looming on the horizon. Maybe you are looking at buying a house in a really volatile real estate market, or perhaps you are considering a massive career change. Take a hard look at how you are approaching it.
Okay.
Are you stubbornly trying to justify your choice using only the numbers on a spreadsheet, convincing yourself you are being purely logical? Or is there a massive, unacknowledged emotional ash cloud driving your choice? Maybe a deep fear of missing out, a desperate desire for status, or a paralyzing dread of failure that you simply haven't dared to write down and face yet.
Wow. Because if you haven't popped the hood to check that engine light, you might be driving right into a bonfire.
Exactly.
Thank you so much for joining us on this deep dive. Keep seeking out those aha moments. Keep questioning the conventional wisdom, and the next time you find yourself wondering, what was I thinking? Remember, the answer is already inside you, just waiting to be read.